The strategies and concepts discussed are for educational purposes only and do not represent specific investment, tax, or estate planning advice. Investing carries an inherent element of risk, and it is possible to lose principal and interest when investing in securities. No strategy can guarantee a profit or prevent a loss. The views expressed represent the personal opinions of the presenter or featured guests, not necessarily those of USA Financial or its affiliated subsidiaries. Any opinions or forecasting statements are subject to change at any time and without notice. John Cyndia is an investment advisor representative of, and advisory services are offered through USA Financial Securities Corporation, member FINRA SIPC, a registered investment advisor. Life Stages Advisory is not affiliated with USA Financial Securities. Life Stages Advisory, Dean or Remington, or any guest we have are not affiliated with USA Financial Securities. Welcome to episode 63 of WTF, Wealth, Tax, and Finances. I'm your host, John Cyndia, certified public accountant and personal financial specialist. Today we're talking about bubbles, stock market, housing market, crypto market, anything. What's that? No, none of those. Yes, we're in a bubble. People are saying that they are going to buy anything at any price, whether it's houses, whether it's NFTs like we talked about the last time, whether it's cryptocurrency, is it stocks, technology stocks, it just doesn't matter. Everybody, if they want something and they think it's going to go up in value, they're buying it. I think there's going to be a lot of consternation when there is a reckoning, and that happens to be sometime, I would say, sooner than later. You've got some people that are saying April, somewhere between April and June, there could be anywhere between a 50 to 70% pullback, maybe 90% within the technology sector. Others are saying that before that happens, you're going to see Bitcoin at 100,000, and it's hovering right around 59,000, 60,000 right now. Some of them are saying by the end of the year, Bitcoin's going to hit 250,000, 350,000. This is all what I would think is wild speculation at this point. Could it happen? Sure. Will it happen? Don't know. But is it a situation that you actually want to go in and start piling in on this stuff right now? I think you got to be very cautious. The bubble situation has been brewing for quite a while. The stock market's pretty much gone straight up for 12 years. Yes, we did have a little bit of a hiccup there. That little bit of a hiccup was in March of 20 when the market pulled back about 40% in a few days and pretty much sprung right back. Within about 6 months, we were even, and we're even higher today. I was taking a look here at the markets and stuff and where we've been just this first quarter. If we're looking at the stock market, the Dow's up about 6.6%. The NASDAQ's up about 2.1%. S&P's up about 5.2%. Gold is down about 8%. Silver's down 5%. Mortgage rates and are stable. They haven't started moving up yet, but the 10-year rate has gone from a little over 1 to 1.7, and the 30-year Treasury has gone from 1.8 to 2.35. Now, what does all that and some of that mean, and how is it interrelated? People keep wanting to go and pour their money into gold, and gold is a hedge against inflation, and we're as far away from inflation as I've seen for a long time. We don't have any signs of that. Pumping the economy with all of the stimulus it's been in, $1.9 trillion for the third stimulus situation, another 2.1 in infrastructure. Could there be a fourth bailout of stimulus? There could be. They're talking about it. So all of this could result in some inflation down the road, but at this point, that's probably not going to happen. The other thing is that when you start looking at these bubbles, whenever they go to burst, it's going to be at this time, you could be looking at more of a deflationary situation. So that's going to be the farthest thing from inflation, and gold isn't going to exactly be the place to hide anything, or at least to keep your money or hold still for a little while here. What about cash? Well, cash, they say, is always king, but is that a good place to be? Maybe in the short term, we've started putting some of the clients in larger cash positions than they've either been used to or that we've seen in several years. I don't look at it as timing the market as much as I look at taking profits. When you're up 50, 60, 80, 150% in 1, 2, or 3 years, I think that's a good time to say, hey, we made some money. Let's hold off a little bit. If you're in there and you're looking at $300,000, $400,000, $500,000 worth of profits, try and equate that back into what your 401k needs to max out. Depending on your age, it could be around 19, could be 26,000. And if you're looking at $400,000 of a gain like we had with one client, that's 15, 18 years of maxing out their 401k. So that's not too bad if you're looking at it from that perspective. They're several years ahead of schedule for that. So don't worry about taking profits. It's not a bad word, and don't try and get it mixed up with timing the market. It's a situation that we're just waiting for another opportunity on a pullback. I don't think once we have the pullback and a correction, I don't think it's going to snap back within 6 or 8 months. I think we'll probably have a couple of years that it's going to take because a lot of people are going to get burnt on this thing. When you have so much money going after so few quality types of investments at this point, but then you have stocks that are, you have industrial stocks that have gone up 150, 200% that have never been, they're in a stratosphere. They've never been as high as they have been. They started out as nice dividend-paying stocks at 4 or 5%. They've gone up so much that their dividends are only maybe like 1.25%. To me, they have farther to fall than they do having the ability to gain any more value. So you got to be very careful in this market. I think there's going to be certain sectors that are going to get hit harder. The technology is in a bubble similar to what we saw in 1999, 2000. And you just have to be very, very careful where you're going to be putting money. And I think that's why certain things like you see the corporations going into Bitcoin, I think they're also looking for opportunities to get on that bandwagon for that FOMO situation, that fear of missing out. They're also adding in what they're considering it as an asset allocation boost. While it's, I think it's still a lot more speculation on Bitcoin and cryptocurrency than it is an asset, that I think we need to not get caught up on the emotional side of this, step back a little bit and see what makes some common sense. Take a breath and analyze all of this stuff. Same as we had in the last episode. When you're looking at NFTs, you're looking at crypto, you have to make sure that whatever you're doing is going to make sense. And if it's as an investment, to make sure that, it falls in with your investment philosophy and what your goals are. A lot of people don't even have a plan. And that's one of the things about investment policy or an investment plan is when you're doing something, you have to have an end game to what you're doing here. You can't just say, well, I'm going to try this and put X dollars towards something. Oh, I want to buy options. I want to buy stocks. I want to leverage this. I want to short something else or whatever. First of all, you can throw all kinds of jargon around, but it's a situation of, is that right for you? Is it going to set you up to reach your goals? And does it make sense? You really have to have some common sense and in a plan in order to do this stuff. so many people have just gotten to the point where they feeling they're getting left behind. So they want to jump on this thing here in the 11th hour. And I think those are the people that are going to get hurt in this whole thing when it comes crashing down. There's an adjustment. It was the same thing with the people chasing with the Reddit deal. A lot of the ones that had gotten in got killed that last couple of days. Now it's just sort of been hovering. I've watched it sort of sporadically, but it's still up around, I think 180 was the last time I saw it. But there again, I think reality's going to have to hit on that thing at some point here, and come back down, because there's really nothing there holding that up except the Reddit people and still trading on that stuff.
Yeah, people are kind of just throwing their money out there, hoping they can make a big buck.
Yeah,
quick. I guess
it's just a quick fix.
Which we've talked about that many times before. It's like you can't bet everything in hoping you're going to win. That can't be your plan. And I know right now, you said in the past 12 years, the market's pretty much been going up.
Mm-hmm.
At any time, it could crash.
Yeah.
In betting the house on that could be really, really bad. If something did happen. So, and it's like I've said before, told Rem about it. A couple $100 to test it out and see what happens.
Yeah,
not
just
a really
bet
big
what
deal.
you're willing to lose.
Yeah,
Mm-hmm.
It's not a big deal, but if you're actually going to get in and invest, you need to have a plan. You need to have an exit strategy. You need to know what you're doing. Otherwise, you're going to get hurt.
Yeah, and around what you said is a situation. You have to be willing to lose that, or be able to lose that without jumping off the roof or driving yourself crazy if you did lose the money. If it's 200, if it's 1,000, if it's 10,000, whatever is an amount for you that you could tolerate losing. Nobody wants to lose anything. Everybody wants to sit there and put $1,000 in and hope you get 10,000 back out. But there again, I mean, people have always, they keep thinking that profit is a bad word. And whether it's short-term or long-term, if you've doubled your money, there's nothing wrong with taking half of it out or more. We did that when we talked about on yours one time.
It's like social media and the connection of people have made people more vocal about, how much they're spending, how much they're gaining, how much they're losing. And I think when you look at what you have invested, like say if you're in a particular stock or a particular investment and you have $500 in it and you feel pretty good about that, and you find out one of your good friends or somebody online that you went to school with that has 15,000, 20,000, 50 grand in that, and this is how much they've made, you kind of go, wow, I need to put more in. And it's not really the case. Kind of, I guess in a way it doesn't hurt to kind of follow people when it comes to investing, but that's never like a sound ideology. You don't.
It's like keeping up with the Joneses again, your neighbor.
You don't need to chase what everybody else is doing. Yeah, sure. I mean, some things are trendy, especially if you're into day trading, where you can, throw a couple $100 at something and actually make a quick buck really fast. But, that's all trendy stuff. And like you said, it's kind of keeping up with the Joneses. You don't need to do that. It's not necessary.
You gotta wait for the market to come to you, because, when you start, I've seen a lot of ups and downs in the market and a lot of different trading things I've looked at, and just different types of systems that people have talked about over the years. And like you say, they're mostly trendy. Some people use it. They do momentum investing and get out of the way, and you can't anticipate this, that, or whatever, and timing the market and doing everything else and watching charts and Fibonacci ratios and all kinds of stuff. And everything, there are patterns. There definitely are. But it's going to be a relative pattern, and it's going to be there a good deal of the time. So you're playing the odds. It's almost like the house in Vegas or something. If you have all that on your side, you've got a better shot at making some money and a profit. But a lot of the people don't do that, and it's all emotional. And when you get into that, there's going to be another trade. There's going to be another opportunity. There always is. So you can't get caught up into it. I mean, I know years ago, I mean, I would turn around and sit there and go, geez, I got to get my hands on this thing. And then you find out the trends of the market and stuff, and things at the beginning of a market day usually pop right away, and then they come back and they settle down. And so a lot of the professional traders don't do anything till 10:30, 11 o'clock, and then they get out by 1, 2 o'clock, and then everybody else is, getting stuck by 4 o'clock. So they're just different things that you start watching in the market, and it's like, that might be wise not to do that, or just look at certain trends. But the bubbles and stuff aren't just in the stock market, not in cryptocurrency. It's also in the real estate. I was looking at an article the other day that there was a realtor in suburban Washington, D.C. She was a realtor there for about 15 years or so, and she had put up a house for sale on a Thursday. It was an 1,800 square foot ranch. It was a fixer-upper. Now, what that means, I have no clue in suburban D.C. The price was $275,000. By Sunday, she had 88 offers. 76 were cash, all cash, and 15 hadn't even had the opportunity to go into the house to see it. They called up, they saw it on the internet, and without taking a tour or anything else, they were putting in bids. Now, to me, when you've got that kind of money coming after this, 76 people was all cash. The deals came in. It ended up selling for $470,000. It was a 70% premium over the asking price. The people had all cash. They had their papers ready, and they were looking to close the deal that day. Now, I don't know how much you'd have to put in to fix it up, what's going to have to happen, but I can almost guarantee you that before they sell it and make anything, there's going to be some type of a correction in this market. Now, I understand that the inventory is down, and part of that, if you start looking at it, was because of COVID. Prices supposedly went down by 30-40% in some of these areas last year because of COVID. And because of that, nobody was selling, and nobody wanted to buy anything. So prices went down. Since then, when the market opened back up again, prices started escalating. But they're in a shortage because the people started fixing up their houses. Now they don't want to move. So if they're fixing up their house and they don't want to move, the inventory is going down. You can't get the materials for builders, so housing starts went down. So when you have a 3 to 6 week normally for period for parts and supplies, now you're into 4, 6, 8 months. We were looking to get a couch. We thought it was in this local area here. We saw a couch that was on display, and we thought they had it in stock. They said, no, it would be 4 to 6 months, and we have to order it. And it was off the floor. And I said, can't we buy that one? And he said, no, you can't buy that one.
You can't
we
have
have
a
to
floor
order
model,
it,
John.
And they just put it out, and it was just like, no, we just put it out that day. They were just getting it out. Nobody had sat in, I don't think. And they said, no, that's just for display. We have to have that, but it's 4 to 6 months at a minimum.
Jeez.
At a minimum. And
you better get just some lawn chairs or something.
Yeah.
And sit
So
on those instead.
so that was just some of the furniture. So I've got a lot of contractors for clients, and they're looking at 4 to 6 months. Some of them sometimes 8 months, depending on what type of material and what they're needing for that.
Are they going to build you the couch instead?
They're
Send them
probably
pictures
going
of
to.
it?
Yeah, it's only going to take 4 months.
Yeah.
So
we'll take that over.
I'm making my own couch. So you're looking at this housing market, and even though there's new construction coming up and everything, I just don't see where this turnover is. I mean, it started a couple years ago when somebody'd have a $200,000 house and they'd bid it up and they'd get $210,000 or $215,000. Now you're looking at something like this. It's 70% over asking price. It's insane.
Well, and it's really frustrating. Like I've told you before, I have a good buddy who's a realtor in the this Northeast Ohio area, and he's got, at any time, right, probably right now, 10 to 12 buyers, people trying to buy, but no one's selling. So what he's running into is, some of these buyers, they'll just, anytime they see a house, they're like, sure, I want it. So he'll write an offer on it. I think he had one client that they wrote 14 offers on 14 different houses.
Jeez.
Didn't get any of them. And most of them were almost at least $5,000 over asking. So it's like,
they didn't get him because
so many other people were doing the same thing. People were doing 10, 15,000 over asking.
and he just wasn't there.
Yeah. And
Okay.
and he's like, I can't tell these clients to spend 25, 30 grand over asking because the house really isn't worth that.
Mm-hmm.
Just because the market is worth that right now doesn't mean that the house is worth it.
Mm-hmm.
You're going to put somebody in a really bad situation where they buy a $200,000 house for 240 grand. And then, 6 months, 8 months, a year from now, next week, who knows, that house is worth 200 grand again. You paid 80 grand over, whatever
Yeah.
you paid over,
Well, and see, the thing is, they're saying, oh, well, I have to buy it now. Why do you have to buy it now? Well, because the rates are going to go up. People have been saying that for 6, 8 years, and they haven't gone up. They've kept going down. Are they going to go up? Probably. Eventually they will. But do you understand how, if you're at 2.5% to 3%, how high the rate has to go in order for you to justify $180,000 excess price
right?
of what you're paying? 1% increase on a $200,000 house isn't going to come up to $180,000 anytime soon. So it just doesn't make any economic sense. You can run some calculations on it, but I can guarantee you, it's
I think it's pretty smart. I need a house.
you need a house. Yeah.
I'm willing to pay almost double what they're asking, John.
Jeez. But that's a non-starter, I think. And I've got a couple other contractors that are in the working out of Florida now, and they're flipping houses. They're getting a house for $200,000. They're putting it's like lipstick on a pig. They're painting it. There's no structural damage or anything like that.
That's
And they're getting high 2s, low 3s on this stuff in a matter of 2 months.
That's crazy. My buddy was showing me a house. I want to say it was south of Akron in like the Canton area, and they had bought the house in December. Whomever was selling this house, they bought the house in December for $110,000. It was pretty ugly. It's pretty bad. Needed some work. What is it? It's the beginning of April now. They fixed up that house, painted everything, put carpet in, whatever they did. I don't know how much they spent on it. They're listing for $220,000.
Jeez.
So what I'm hearing from all this is the house that I just bought for $70,000
It's worth $140,000.
Yeah, I mean, we just did a brand new bathroom.
See if you can
I'm
sell
sure we
it.
could maybe jack that up to $200,000. I mean,
Yeah.
Yeah.
It's like whatever, and it's, when people do want something and they get emotional about it, they will pay whatever it takes.
Yeah.
They really don't care.
Yeah, and it's a situation that once they do that, that's when that buyer's remorse comes in, and especially with something like that,
I just think you're going to see, with everything that's been going on in the past few months, you're going to see a large turnaround in the next year or so when people realize they can't afford what they bought, or they realize that, like you said, buyer's remorse. I shouldn't have bought this house. I shouldn't have bought in this area.
Well, here's the thing. Okay, first of all, if it's a younger buyer, which a lot of these people are saying that there are younger buyers that are in here that thinking they can't get into it, you're not going to be in that house for 40 years. You're probably going to have several different houses. I mean, just through us moving, relocating, different opportunities through my career and everything, we've had 7 houses. Okay, so this is by far the one we've been in the longest. It's been, I think, around 12, going on 12 years. Other ones were anywhere from 4 to 6. Okay, and then you either move, something happens. And we downsized this last time, and we're at an 1,800 square foot ranch, okay? And I wanted that for one floor. We had I just didn't want to go up steps all the time, and I was looking at it
For
like,
your
hey,
wheelchair.
we get older, yeah, you know, for my
Do you
walker,
you need an acorn stair lift?
for my yeah, for my my walker and everything else that I've got. Shut up. Anyway, you're gonna get it. So, where was I? Yeah. Anyway, we ended up we downsized and just made it a little bit more practical, but it's ours, and you know it's comfortable. And we found out that we didn't need 4,000 square feet. We didn't need 2,800 square feet. We're at 1,800, and we still don't use it. You know, full basement and everything else. But what we do have, you know, we like and we use, and everything's fine. But when you start looking at the emotional side of this, once the correction hits, and there will be a correction here, and if it does go, like some of these pundits are saying, and there's economists, there's advisors, for the most part, everybody's saying, yeah, go ahead and buy it. Well, the person who was saying, yeah, go ahead, jump on that and buy it right now, was a broker. So he's selling houses. So guess what? Yeah, he wants to make some money. But when it comes down to a practical, common sense standpoint, just hang on, you know, ride this out, because you'll probably end up getting something at a hell of a bargain, you know, as opposed to doing this.
That's what my buddy was telling me, because, you know, I'm 23 now and I'm looking to move out, you know, pretty soon. And I think Rem bought it like, you know, right. But you guys bought right before it got crazy.
Oh,
really.
yeah.
Oh, yeah. We only had one other guy that we were, I guess you could say, in competition with for the house.
Your house right now probably would have had 10 or 15 buyers on it now.
Oh, yeah, probably.
Yeah, so, and that's what my buddy was telling me. He's like, dude, you just got to wait it out. I know it's not fun living with your parents or whatever, but, you know, if you wait it out, you're going to get a heck of a deal on a nice house, you know, when all these people decide, hey, I don't want what one I got, or, hey, you know, like you're saying, the market's going to take a big correction, and then those houses are going to be way more affordable again.
Well, and, you know, it's going to be a bargain relative to today. You know, could it still be high? It might be high, but it could also be a lot lower than what it is now.
Even if it got back to normal,
exactly,
you know,
whatever.
normalcy at least, you know, you could say justify that that's okay. But
yeah,
you know, right now paying 30-40% over what asking is, I just can't do it.
Yeah, and you know, when you start looking at, you know, all the other situations that you know, that compound on this, when the market comes back and it starts to correct, there's going to be jobs lost again. And, you know, you may be the person who just bought that house at, you know, 50-60% over what it was, and you may be the one that's losing your job, because there's going to be a compression. If there is we don't have the inflation from all this, and there is a deflationary standpoint, similar to what happened in Japan back in the 80s and stuff, lasted 20 years. They're still trying to crawl out of it. They were in negative interest rates forever. So when you start looking at stuff like that, you know, you can't do anything. It's hard to get anywhere with that stuff. And if the companies start cutting back, and you've probably seen it already during COVID, some of these people and the companies have cut back. People are working out of their house. They're looking at it saying, okay, I'm going to buy a house, but now I'm going to have an office in it. You know, that's short-term thinking, because you don't know if you're ever going to have that. You're going to be there. Yeah, you could be flexible and have a job out of California, you know, and work from home in Ohio. But, you know, you just don't know what, you know, the future's going to have. But when you turn around and you have all these dollars going at everything, and everything's emotional, whether it's the stock market, the crypto market, the real estate market, or whatever, you know, and you see this, that's not normal. You know, I've lived in normal times, and I understand it. You know, I just don't think that the statement, hey, it's going to be different this time.
Yeah, I mean,
you know,
stocks jumping 150% in a week.
No,
you know?
that's not. It can't, and it's not sustainable. So I sort of tend to believe the situation that, you know, there's going to be a reckoning here.
I would just say, stay tuned. The day of reckoning will come. The record will be straight.
When is that? I don't know. It could be, you know, this month of April. It could be June. It might not be till the fall. But something's going to happen when it does. I want to just be ready for it. And all I'm saying is, prepare for that. Don't be afraid to take some cash positions. If you're up a lot on your stocks and stuff, take some gains, especially if you're in a 401k or an IRA or something, because you won't have any tax consequences whatsoever. If you've got some other long-term gains, don't be afraid to take some of that off the table too. I'm not saying go all to cash, but you can still have some of your money work for you. But don't be afraid to take that off the table and get some gains out of this stuff, because this is going to be a heck of a bubble, I think. People keep saying, no, they're giving other justifications to be able to prop this up, and I just don't see it. To me, I was looking at a real estate correction back in 2008 when that hit. What propped that up, though, I thought that was going to happen in 2000, but what happened there was people kept using their house because of the increase in real estate prices. They used their house as a piggy bank and kept getting equity loans on it. So
Right.
all of a sudden, my 100,000 house was 125. I take money out. It's worth 150. I take more money out. It's worth 175. I take more money out. They kicked the can down the road for 7 or 8 years until 2008 hit, and then we had the
Well,
real
yeah, and I
estate
mean,
crisis.
even before that, like you could go to the bank and say you wanted a house, and they'd be like, okay.
Mhm.
And there's nothing involved. Like
Yeah.
now the process, to get even pre-approved is pretty extensive. They want to see bank statements. They want to see
yeah.
your savings account. They want to know how much you pay in loans every year. Like Rem, you know all this. They ask
Yeah,
everything.
we had fun with all that.
Yeah, they ask you a ton of. They
was so
get
fun.
they get a ton of information from you now. And I mean, back then it was like, sure, you can have a house. How much do you want to pay?
Yeah, exactly.
So I mean, that whole process has changed, but it still hasn't stopped people from overspending.
Yeah, yeah. And so all I'm doing, I guess, is trying to give you some awareness and build in the fact that, step back, take a breath, walk around the house a couple times, go in the neighborhood, just, walk it off. If you think you have to
Get
jump
that
on
idea out of your mind.
yeah, whatever it takes, get that rubber room like I got. Beat your head against the wall a couple of times, Yeah, that explains a lot, doesn't it? Okay. Anyway, do that every once in a while. So
Yeah, get it all out.
yeah, oh geez. Yeah, plus it's tax season, so you got to do a little bit more now. But yeah, just if you think that you can't wait, you're wrong. It's not like buying a pair of shoes and I got to have that, or women have to have another handbag, or, hey, it might be gone, but there'll be another one that you'll see at some point in
Well,
time.
I mean, you're talking about like the most money you're probably ever going to spend in your life at one time.
Besides a car, the
Right.
house is
or
the
an
most
NFT.
expensive.
Calling back
NFT.
to last
Or-
episode.
Yeah.
So whatever it takes. Anyway, Rem, what should they do?
Oh, buddy. They should like the video if they're watching on YouTube. Give us a review if they're listening to just the audio. They should leave a comment, subscribe, turn the notification bell on, share with as many people as possible. Maybe re-listen on Apple Podcasts. We're pretty low on there.
Yeah, what Rem said. Dean, do you have anything?
Leave us a comment if you've spent over 100,000 extra on a house than you should have.
Or
And
leave us a
how do you
comment.
feel now?
Yeah. I want to. I'm curious.
Yeah.
Huh.
Yeah. No. Nothing bad. Okay. Nothing dumb or stupid. here.
Where can they email you at, John?
They can email me, jcindy@lifestagesadvisory.com. And I've had probably a dozen people in the last month that have gotten back to me, and I get back to them. So you will have me. It's not, I don't have a ghostwriter.
No
It's
ghost.
me.
It's
No
John.
ghost. It's really me.
Right to
Yeah.
John.
Yeah, that's right.
Right to John.
Comes to the man. Yeah.
Maybe I'm going to send him an email after this.
Don't. I'll know who it is.
He'll block me.
Yeah. All right. Well, I hope you enjoy this episode as the rest of those, and do what Rem said.
Oh, yeah.
All that stuff.
Like, subscribe. That's the main thing. Main takeaway there. Just like, subscribe, and turn the notifications on.
That's it. We'll see you next time. Thanks.